All right, what's up, guys? I know I promised a video on going over how to plan a trade, specifically the Atom trade that we took the other day, that I updated you through, like how we averaged in, what my thought process was, and how I executed each order instead of going all in at once. So first off, you're going to want to mark your levels, of course, whatever coin you're watching. Um, I have these levels marked from a while back from December. If I zoom out, that was our initial trade. That's a good one to go over too real quick. So this is our downtrend from the top in October at $43. You can just see all I did was drag a line from this top to these highs here, right? And you can just see how it was treated as resistance, resistance, resistance again, failed, pumped right through it, dumped, resistance again, again and again. Finally broke out of it right around December 18th, hit 2370, which is one of the levels I've marked that we're going to be going over in this trade. Came back down, and when I said to go long at 21, this was why, because the retap of the downtrend as support, and just so happened to have a lot of hype and did over a 2x. You know, it went from $20 to $45 when my initial target was only really 28. I had just held it, sold most of it off at 32, added it back on at 26, wrote it up. I made six figures on that trade, just from managing one coin and letting it trend. So obviously this isn't always possible. There's not going to be a coin that does a 2x in 2 weeks very often, but just saying how I spotted it in the first place was a retap of the downtrend, and that's going to help in this case study that I'm going over as well. And this is the zone I have as well. This little demand area going from $27 to $25.80. So now we're going to get into why I thought this was a good trade. What was I looking at? Was it slow mode? I believe I was looking at a high time frame. This takes so long to load sometimes. No. Let's go back to normal. Let's look at the 12-hour real quick. I think that's what I was looking at. No, not that either. Either way, I'll go into the hourly. So I wasn't really paying attention to the belt as much for this trade. I was just paying attention to this 2460 level here, because we hadn't tapped that level since we initially took off. Sorry, it's best to go in high time frame when I'm zooming back. So this 2460 level was right here. All I did was mark it from this low on December 4th. You can see I was treated as resistance here as well. We eventually flipped it here right after I'd taken the long. Once we had flipped it, that was super bullish. It took off to $28, $29. We haven't seen this level since we initially flipped it, December 22nd. So that's why I was bullish on the first place, but because we were dumping, I wanted to ease in. I'd stated the plan. 10x leverage was what I wanted to do, but I didn't want to go all in at once. My first buy was 2460 here. Didn't think it was going to go lower than that, especially after this hourly closed right on it. So I went 2x leverage here. Account balance, I wanted to do 10x total. So 20% in the beginning. Okay, so that hourly closed. I thought we might bounce. We did not. We kind of wicked above 24.75 and then had that shitty hourly all the way down to our next level, 23.70, which we were wicking into. So I began to add more on the way down. I know I placed buys at 24.10 here, and then a lot at 23.80, which put it up to 5x leverage, half of what I wanted to put on. And then, okay, so I was thinking, okay, maybe we're going to bounce here, right? So I was half of what I wanted to put on. Again, target was, $26 to $27 back into this range. Put that there in a moment. And invalidation was below $23. Now I didn't want to go below 23 because it would be back into this downtrend. Now this trend, all it was really from February 17th. All it did was drag a line from the top to here, and you can just see it was traded resistance, 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 flipped it here, 25.44, went to 27.30. See, that's how you notice plays. Break out of a downtrend, retest it as support, makes a move, a 10% move. So that's what I was looking for. And then here, we were just not really pumping. I was expecting a pump back up towards 24.60. If you guys go back through Barney trades, it's only a couple of days ago now. Won't be hard to find. You can just search Adam. And I talked about every buy that I was doing in real time. So even though it was dipping, I was buying more because I wanted, not because I was recklessly gambling, but my plan was to ease into it and get a nice average price towards the lows. So I didn't add any more on once, we kept tapping this 23.70. My plan was I was going to pump right back. I was going to have a nice reaction here. It wasn't. So, okay, I had said I have this nice downtrend. Right around 23.20, 23.10 is where I'm going to expect a bounce. I believe I was in the belt. Was I in the daily? Yeah, so I was also looking at this when it happened. We were literally at the bottom of the belt for the daily on normal mode, which is usually the bottom. So we came back down, 23.70. So like I said, I wanted to add back on that retap of the downtrend, which we got. I was very happy to see this candle here, right? So I had put the remainder 5x, so full 10x leverage here at right around, I got in at 23.10. It went to $23, 23.10. Instant bounce all the way back up to like 23.40. Next hourly was treating the level that was previously support here as resistance. So then I was like, oh, fuck. Like, am I okay? So I've been, my initial entry is 24.60. Since I've been buying on the way down, my break even has been lower and lower. It was right around 23.80 for the total, 23.75, something like that. And I couldn't get the trade to go green. We were treating the previous level that was support as resistance. So I had stated in Barney Trades that I'm going to de-risk the buys that I put on here, take them off for the 2% profit. Okay, so I'm still negative for the overall trade, but I'm de-risking the buys I bought down here. And I will add them back on a flip of the level. So what that does is, okay, if it does end up dumping even more, at least the buys that I had here, I got profit on. And if I do get stopped out and we go below 23, which was my invalidation, I'm not going to lose as much, right? So I sold it off. I let it play out for a little bit. Literally tapped as resistance 4 times in a row for hourly. So I wasn't getting to, bullish. I was like, oh shit, I might be stopped out of this. Some of the best trades you're going to have, guys, you're going to be scared. No, this isn't easy to do. So eventually it flipped. I saw a close above 23.70, right around 23.80. Next hourly, same thing, flipped it as support, and then it took off. So I added the 5x, or half of the position I had taken off here, back on, came back up, right back to our 24.60, closed above. Was pretty happy with that. Took some of the profit off, came back down, was treating 24.60 as resistance again, came back up, added it back on. So that's a good tactic. I just want you to understand what I'm talking about. I know it sounds confusing, but how I ride accounts from, a measly 800 to 200K is through this strategy. I'm de-risking at resistance, right, which is the highs. It comes back down. I can either add back on lower, right, and have an even bigger position than I had before, or wait to see it flip it as support here, right? So it eventually, okay, came down back all the way down to $24, right around, I guess, 2.5%, dump. 2.5% when your leverage is a lot. You can add that back on lower. Now you even have a better break even. Came back up, and then we just kind of kept flipping levels over and over again until we eventually broke into my zone here, and 26.50. Didn't quite tap the $27. Literally was 5 cents away. um, but that is how I plan trades, and hopefully that's helpful. I sold all of it at 26, like I said. And another thing was I was raising my stop loss. So once we came up here, I said my stop loss now is right around $25. So even if it does break all the way below and I don't have the time to close it or I'm not available, I'm going to close it in profit, right? The worst thing you could possibly do, so my break even was around 23.70 for the trade because I was buying lower, and the 23.10 buys, right? Validation was below this downtrend, right around 22.86. Target was $27, 26 to 27. And there you go. Now, if I hadn't taken profit, now why I always say it's so important to be taking profit, is because on the way up is because something like this can happen. No one could have predicted that we would have just dumped ridiculously because of the war. Everyone thought the war was a joke. To be honest, I'm not too sure how serious it really is in correlation to the markets, but there's no way you could have predicted that was going to happen. If I had just left my stop loss, never taken any profit, and never raised my stop loss up to where it would have been invalidated for this trend, I was looking for a low right around here, okay, stop loss right around, I don't want to go back below this level, right? Especially since you were seeing it here on the hourly belt was kind of flipping as support. If you thought it was going to go higher to maybe retest this downtrend, you don't want it to go back below this. Just it would invalidate the trend, the little medium one we have going on right now. So you would have not only lost all of the money you would have made, and that you were so happy about achieving. It's not easy to make money in this market at the moment. You would have been stopped out and lost, whatever your loss, whatever your risk was here to be stopped out, you would have just lost it. So you would have lost money instead of making a ton because it pumped about 14 to the top, about 13% from where I was telling you guys to get in, right around 23.70. So that's just a good case study. Now, I guess I'll go make a little summary of the lessons learned on how to plan a trade like this. So always mark out your levels. Don't pay attention to indicators too much. They're not always accurate, but levels most certainly are. Playing price action from level to level is how I really trade. So 24.60 I knew was the level that we had flipped and took off right here, and right before Christmas to make our highs at $40, $45. Hadn't seen it since. And it was also the bottom of the daily asteroids belt on normal mode. So I was, hoping that would be it. Kept dipping lower, down to the 23.70. Okay, I'm gonna buy more. I'm still bullish. It's been down only since we were at $30. We're down roughly about 30%. I'm just like this is my mindset, and this is also the low time frame downtrend that I had. Retapped of it, put the max on, the full 10x was on, and how I managed it was, taking it off at 23.70, adding it back on the flip, taking profit on the way up before we even reach the target, just in case, because your targets are not always going to get reached. You have to be able to adapt. You need to be, there's nothing wrong with making money. Of course, you could have always made more, used more leverage, waited till it went all the way up, but those are all uncertainties, and in this game you have to take profit where you can. So that's one lesson. Another one is always mark these downtrends, look for flips of them as support. Literally was the low before making, and from there it went 17%. If we just waited entirely. From this one, it went like, I don't know, 150% total. Yeah, something like that. So these flips of the downtrend are a very good strategy and price action to pay attention to. And one of the most important things to learn from this case study is to not go all in at once. Have a plan. I know it's, okay, adding on the way down, stuff like that can seem like gambling, like you're just trying to protect a position that's a failure. Just have an invalidation level set, man. You know what I mean? My invalidation level was below 23. It was make it or break it here, right? I could have been stopped out if we kept dumping for some reason all the way down this $21 level. I would have been out, and that happens. But took my shot, added it back on, sold it, added it back on, sold it, added it back on, and there you go. That is how you ride a trade, and yeah, that's how you make a lot of money. So hopefully this is helpful. I could do more of these. I just used this specific example because it's the most recent, and the most recent in my head and how I played it, and that I updated every move I made in real time in Barney trades, which is difficult for me to do all the time, simply because sometimes you only have a couple seconds to make a move like this. So yeah, hopefully this was helpful. I'm going to upload it now, and I'm also going to be making another video on just the market in general, which I'll be posting shortly. All right, have a great day, guys.